Welcome back. You're still tuned into MF Corner, and as promised, now we have with us Harshvardhan Roonghta, CFP at Roonghta Securities. We're discussing all about international investing via mutual funds, and now that the spotlight is back on global markets, especially with the change in the US government. Harshvardhan, good afternoon. Thank you so much for joining in. I know we've spoken about that big change that has come by, Donald Trump coming back. So how do you look at the international markets now with this change? Is this a good time to go ahead and invest in international funds?
Hi, Sonal. In general, if we look at the global economies, except the emerging markets, the entire global economy in that context is in a fragile state. And any one country, US has a very large impact on the global economy. However, any policies that are introduced by, say, the Trump government or any specific country for that matter will have only a limited impact all across. There is going to be some impact, but it's not going to be so significant that a retail investor sitting here in India may take a call based on what the policies would be. And besides, other than that, Trump is actually known to be inclined towards protecting the American economy. And he's been very vocal on hiking duties and creating more jobs for American citizens. So all these measures that we will see coming in, probably, and I don't know how soon they're going to implement this, but all these policies that come in, you will see that they will be there will be high inflation for that matter. And as a result, there would be an impact on the yields. The yields are likely to go up, and the dollar could strengthen further. Besides, we need to also watch out for what the US will be and what stand the US will take with regards to the global tensions that are going on with Russia, Ukraine, Israel, Iran. What is going to be the stand of the new government? So I don't think that merely because Trump has come into power, a retail investor sitting here in India should make, substantial changes to their investments in international.
Okay, take that point. But keeping everything aside, do you think it should be a part of anyone's portfolio? If yes, how much do you think they should be allocated? Is it a must for diversification?
Yeah, in fact, now if you look at it in general from a financial planning standpoint or a portfolio creation standpoint, yes, international funds would definitely be a part of the portfolio. You could allocate close to, say, 10 to 15% of your portfolio to international, equities for a reason. I'll tell you. One is, of course, there are many MNCs, globally large companies who are giants in their respective fields, and they're not listed in India. So in case, if you and I want to invest into some company which is very large, say Google, for example, we want to invest into many other companies which are very large globally but are not listed on Indian exchanges. So how do you go about taking exposure into those companies? One of the methods would be to invest into an international fund. The convenience that it offers that I can invest in Indian rupees and INR just the way I do any other investment, and I get international exposure, I think it's a very, very good option. The other is, of course, you would want to look at geographical diversification. So while you will have a majority of your investments in India, a small portion, a 10 to 15% can be allocated to different geographies. Now, that could be the developed markets such as US, or it could be emerging markets. It could be any other geographical location across the world. And the third, of course, is that you get an option to invest into dollar assets. So while you're making an investment into an international fund, your investment is actually being made in the form of a dollar product. So in case of rupee depreciating, this becomes as a good hedge. Now, this works very well for at least those individuals who are looking at sending their children overseas for higher education. So they will have at least insulated themselves from the dollar appreciation that would be probably impacting them in the next 5, 10, or 15 years.
Okay, that makes sense because those would help with the general or basic goals that any parent has for their kids when they want to send them abroad. Any international funds that you like, Harshvardhan, something that an investor can look at investing into?
Okay, so let me just break down the options that are available. Okay, so Sonal, there are about 4 or 5 options that I can categorize all these international offerings under. So one is, of course, a plain vanilla index fund, wherein the investment that you do in the international scheme will eventually just land up buying the NASDAQ 100 or an S&P 500. So they basically track the international indexes. Similar to how you have a Nifty or a Sensex index fund, there is an international index fund. So this is one option that an investor has. The other option would be when they have an actively managed international fund. So I'll just explain to you. So the Indian fund will only take the money, they will feed that money. They will take that money and just act as a feeder fund into another mutual fund listed overseas. So there's a fund house internationally. The Indian mutual fund will collect the money and feed this into a scheme run by another fund house in the international geography. So I may probably take money into a Franklin India feeder fund. So that collects money in INR from me here, gives it to Franklin US Opportunities Fund. So it just takes the money and gives it to another. So that is an actively managed fund. The third option that an investor should look at, the scheme that you're investing into goes and invests into which geography? Does it go specifically to only the US? Does it go to Europe? Does it get divided and invest all across different parts of the world? So they could have one fund which invests a part into US, a part into emerging equities, a part into some other countries altogether. So there's a combination. So that's one element that an individual investor will need to look at. And again, the last option is that we have several options now where an Indian mutual fund will collect money and it is going to be theme-based or it's going to be a sector fund. So it's a thematic or a sector fund. Like some schemes have been collecting money, intending to invest into the artificial intelligence sector or a theme. So you need to be very mindful of what kind of international fund you're picking. So I have broken this down for a purpose, is that investors should be able to identify exactly what they want to do. Do they want to go internationally into an index fund? Do they want to give it to an active fund manager internationally? Do they want to invest in any specific geography and avoid certain geographies? Or they want to invest all across the world? Do they want to go into a diversified fund, or they want to take something which is thematic or sector fund? So these are the options that are available in combinations with different fund houses. However, my suggestion would be, as a layman investor, you asked me for my preference. I mean, I'm inclined only towards two kind of products. One is an index fund. I think it's simpler. I mean, as an individual sitting here, I may not be able to track the fund houses or the indexes or the markets internationally. So the easiest way for me to participate is to just pick an index fund there. So I could take a NASDAQ 100 or an S&P 500. It just simply, I know what's happening with my money. Or else I can take a global fund of fund, which basically diversifies my money and puts it across indexes across the world. Not just one index of the US, but indexes across different parts of the world. So these are two options that are mine, something that I believe will be more suitable to retail investors and the less financial savvy investors.
Okay, we get that point. This is about international funds which are investing maybe in equities, right? Completely. Would you look at US Treasury fund of funds now? There are not many options available, but it directly invests into, yield-giving debt securities. We are talking about rate cuts being expected today as well. There's an outcome expected. Would you look at this space?
So, this is an interesting space, quite honestly, because one, and I'm glad you brought it up, because, first and foremost, the yields internationally are also not sub-zero anymore. So there is some kind of an interest that you earn on, some kind of a yield that you generate on that investment that you're making. Secondly, as I said, these are dollar denominated. So when the rupee depreciates, there is an additional return that you make over the yields that those bonds are going to give. So there is a double benefit that you have over there. Now, with the rate cut expected, of course, there could be one more jump that you could get in terms of capital gain. However, as I said, I mean, the actions that we are expecting Trump administration to implement, such as hiking the duties, and I'm guessing with regards to job, enabling more jobs to U.S. citizens, etc., there could be a situation of high inflation. Being in a high inflation situation, I don't know how soon and what is going to be the quantum of rate cuts, if at all. So I think at this juncture, if at all you want to invest into debt, I mean, better to avoid until you have a clear trajectory of what's going to happen over there.
All right. Point taken. Thank you so much for joining in with your take and expert advice on how to go about international investing via mutual funds right now. With that, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.